Okay, guys, welcome to Stocksnipertrading. This is our weekly webinar. I'm happy that you guys joined us. And in today's webinar, we're going to go over introduction to candlestick characteristics and timeframes. Okay, and this is all on your back end, guys. These are all the tutorials, and this is where we're going to be uploading these webinars. Will be on this page. Okay, so we're going to start uploading weekly. So if you miss these webinars with us live, they'll be recorded for you guys, and you guys can watch them. So hopefully you guys are watching these and learning from these tutorials, so that when you join us in the live streams, you know what like Dave and I are talking about, and you get a little background, and then we can speed up the process. We can teach you as things are happening live. Okay, guys. So and then next week, I'm also going to talk about the pips, lots, leverage, what are different type of orders, like buy orders, sell stops, things like that. We'll explain all of that, and then how to set stop losses, because these three are very, very important. But we'll get the candlesticks out of the way, and then we'll get into this stuff here about the buy and sell orders. So number one, we're going to start off with course one right here. Okay, so characteristics of candlesticks. Guys, can you all see my screen? Everything is all good? Awesome. Okay. So this was gold, actually. This was when we plotted this. If you look at the date, this was like January 14, 2021. This is when gold went to all-time highs. We hit 2,075 on gold. And we were trading this. We were trading this bullish momentum. These are daily candles. So you can see on August, like 4 right here, it came up to 2,000. We broke 2,000. We haven't broke 2,000 on gold in a long, long time. So this was really exciting for us when we were breaking gold at 2,000. And next day it came and it retraced a little bit, continued to move up. That's what this high wick is. It came down, closed the body. I'm going to go into telling you guys all about this stuff. And then next day we made a high up to here, 2,070. It closed, and then this is where it started the momentum coming down. It was August 9th right here. We hit 2,075, all-time high on gold, and we thought it was going to go to 2,100. We were all watching it, and it actually just started coming down, and it started the trend going to where we're at now. And the low that we just hit was 1,764. We had a double bottom off of there. So that's the low that we hit, 1,764, and we've been we're now hopefully we're holding 1,800 on gold, and we can start to move our way up to maybe 1,850, depending on what happens with the U.S. economy and things like that. But gold is a safe haven for money. Okay, so anytime there's volatility with the U.S. dollar, a lot of billionaires and bankers and things like that are taking money out of the U.S. dollar and they're investing in gold. But when the economy, the market is correcting itself and coming back to normal, people are going back to work, the pandemic is starting to finish, then they're taking all their gains from gold and they're buying the US dollar back. So that's like basically how the markets move. And whatever you're trading, if it's against the US dollar, then like if the US dollar is strong, if we're trading the Canadian dollar, we're looking to buy the US dollar and sell the Canadian dollar. If we're the British pound, US dollar, you're looking to sell the pound because the US dollar is strong. And same with the Euro USD. You're looking to sell the Euro when the US dollar is strong. And so these are the candlesticks. We're going to get into the introduction to the candlesticks right here. Okay, so let's get started, guys, with this. Okay, so this is really, really important, guys, okay? It looks very basic, but this is very important. And make sure that you guys understand this, okay? If I'm talking too fast, you guys let me know, because I want you guys to understand this, okay? So we have two types of candles. We have a bullish candle, which is buyers, okay? And they're on normal trading charts, they're green, okay? And you can change the color to your preference. I know some guys that make them purple and whatever it is, but traditionally a bullish candle is buying volume, it's buyers, and it's green. And then we have the bearish candle. This is sellers. And on traditional charts, it's red. Other people change the colors. That's all personal preference, up to you guys. Whatever platform you guys are using, you guys can change the colors, okay? But for us, we use green and red. Green is bullish, red is bearish, green is buyers, red is sellers, okay? And all candlesticks have the same characteristics. This is what I want you guys to take from this course right now. They all have an open, a high, a low, and a close. It doesn't matter if it's a bullish candle or a bearish candle. They all have an open, high, low, and close. And it doesn't matter what time frame you're trading your candle. We can be on a 1 minute candle it'll have an open, high, low, close. The thing is, it will close in 1 minute and it will have another one. And then the next 1 minute candle will have an open, high, low, and close, and will continue to the next minute. But then now you can change your candlestick, your time frames to what you want to trade. 1 minute candles are very, very fast to trade. So obviously, if you're new to trading, you don't want to learn with 1 minute candles. You want to learn maybe on a higher time frame, like 15 minutes, 30 minutes, 1 hour, just to see how they move. But you can see when you're trading with Dave and I, we go on the 5 minutes and every 5 minutes a new candle time frame opens up, and each 5 minute candle has an open, high, low, and close. Same with 15 minutes, 30, 1 hour, 4 hour, a daily candle, even a weekly candle, and even a monthly candle. We're on July 31st will be our last day of our monthly candle. And if you're watching the markets, they are way overextended on the monthly. Like the RSI is at 82, so we are expecting a little bit of a pull down in the market. Traditionally, August are known for pullbacks in the markets leading into the fall and a new quarter. So we'll see what happens. But again, when markets are at all-time highs, they have a mind of their own. They can continue running like but let's so a green candle, it opens at the bottom because it's continuing off of an existing candle. So we have a green candle close right here. Our next green candle opens right here. So a bullish candle opens at the bottom. And this is what is the real body. This big, big green area, that's the real body, which what means is that's where the volume is, okay? That's all the volume, that's all the buyers, okay? And same with a red candle, the bearish candle. This is the real body on a bearish candle, and this is all selling volume. So the bigger the body of the candle, the more pressure, the more selling pressure if it's a red candle, and the more buying pressure it is if it's a green candle. So hopefully that makes sense, guys. And then you have your open, and then this is what forms the body, is your open here, and then you can see where it closes. It closes right here. That's the close of the body. And then we would get a continuation candle right off of here. Then if it's a green candle, it would open here and maybe continue going up, okay? But then these candles can have these wicks on the top or bottom. So some traders call them wicks, other traders call them tails, and other traders call them shadows. So it's whatever you prefer to call them. I like to call them wicks, okay? Because it's a wick of a candle. So, but what these represent is the high and the low of that time frame you're trading, okay? So if this was a 5 minute candle, for example, we opened at $10. The price, whatever we were trading, let's say we were trading gold, and it opened at $10, okay? And there was initial selling pressure. When we opened, there was sellers in the market that pushed the candle down, and that's what creates this lower wick. Like the candle comes down, this would have been a body coming down, but then we pick up maybe it's coming to a support level, and then buyers are entering the market and pushing it up. That's what creates this lower wick. So it's a rejection wick, and it shows that buyers are pushing it up. But this also represents the low of the time frame. So if we opened up at $10 and we dropped down to $8, but then the buyers pushed it up, and then we came all the way, we started getting this big, a lot of buyers pushing this candle all the way up, this big body, and then we made a high up here of, let's say, like $15. Remember, we opened at 10, it came down to 8. At $8, there was a lot of buying support, and they pushed it all the way up to maybe we hit $15, but we never closed up there. So maybe near the end of the time frame, remember, if we're trading 5 minute candles, maybe 3-4 minutes, the last minute, there was a little bit of selling pressure, and they pushed it down and they closed the candle at maybe $12, okay? And then we have a close here, then we would get a continuation candle here. This candle could be either green and continue to move up, or it could be a red candle and sellers come and push it down. And this would be the continuation candle off of a green candle. So remember, a bullish candle opens at the bottom and closes at the top, okay? Because buyers are right here at the bottom and they're pushing the price up. It's going up. So it closes up here. And then the opposite candle is bearish. This is when sellers come in. But you notice that a bearish candle opens now at the top and closes at the bottom because they're pushing the price down, okay? So we have an open here, but we can open here and we could have buyers still continue to push it up. For example, if this opened at $10 and then we had buying pressure push it to maybe $12, that's what creates this upper wick, and then we get selling pressure if it's at like a level of resistance here, and then sellers push it down and with a lot of pressure, because then you see a lot of volume, and that's what creates this big red body. That's all selling pressure. The larger the candle, the more pressure it is. So then we would anticipate that this is going to continue to go down, the bigger the body is. So this one could have been filled up with a lot of selling pressure, and then it came all the way down here. But near the end of the candle that you're trading, it didn't close down there. There was probably some last minute buyers that tried to step in and push it up, and then this is where it closes. Okay, so a bullish candle is buyers, a red candle is sellers, bearish. Green candle, bulls, they open at the bottom, close at the top, and a red candle opens at the top and closes at the bottom. And they all have same characteristics. They have upper wicks, lower wicks, and they all have open, high, low, close. Okay, so do you guys understand that? Is there any questions on that? Because this is like where we start with candlesticks. Okay, you got to know this. This is how, because you see them on our trading view charts that they're all different sizes, shapes. Some have really long wicks. What do those represent? So those represent like rejections, and we'll get more into that. Okay, guys. So that's for the open, high, low, close. Just going to continue moving on with you guys. And then here's another example. Okay, so this is a green candle. Here's the real body. This is a bullish candle, it's buyers. And then we have an upper wick and a lower wick. Okay, so we got buyers, which are called the bulls. And you see A here. So if we follow these dots to A, this is where the candle opens. Okay, but there could be some selling pressure and it pushes down here, but then buyers come back in and they push it up. So that's what creates B, this low, the low of the time frame you're trading, represented by this wick. And then you have buying pressure, push it all the way up to C, which up here we get a high, but then it doesn't close up there. Okay, so then we get selling pressure and they push it down and we close right here. So that's how a bullish candle forms. It opens at the bottom. There could be a low and then they push it back up and it could have high. Some candles also don't have lower or upper wicks. Okay, those are called like ignited candles. The Japanese name for it is a Marabuzo candle. So if we have an open right here and we don't have, if we don't have an open and we don't have a push down, we could have the candle open and there's buyers right away. Like they want to jump in and they don't even allow any selling pressure because there's buyers that buy right away. So that's giving you a little indication that this is going to be a really bullish ignited candle because there's absolutely no drawdown. There's no sellers even pushing it down. It's all buying momentum. So you can anticipate that we're going to get a nice big green candle with possible follow through. So then we judge how long the wick is. And then the shorter the wick is, then the more momentum this has to continue going. So if you're in a trade 5, 10, 15, 20 pips, yeah, we have to analyze this because long wicks represent rejection. So the price could have gone up there, but now sellers are pushing it down hard. Okay, but if we have very minimal wick at the top, that means that all of this volume, all of this bullish momentum is closing near the high of the candle. So we can anticipate continuation and we can continue to hold our trade and make more money. Okay, so that's bullish candle. It's got an open here, a low, a high wick, and a close, and this is called the body, the volume of the candle. Okay, and then we'll get into looking at the opposite, which is the bearish candle right here. Okay, so opposite is the bearish candle. These are sellers or bears. And remember how the green candle, the bullish candle, opened at the bottom? Now our red candle, the bearish candle, it opens at the top. And we could have it opens at the top. We could have some buyers step in right away and push it up to B here. And then we might have selling pressure. They push it down. That's what creates that upper wick. And then they have a lot of selling volume, a lot of pressure, pushing the price all the way down here to C, where it makes a low of that period you're trading. Whether it's a 5-minute candle, a 15-minute, an hour candle, a daily candle, they all represent the same stuff. It's a low of that period. And then we might have near the end of the candle before it's closing, it could buyers step in to maybe try and get in cheap, and they push it up so that they can get in on the next candle. Okay, and that represents the low of the wick, and we can have a close right here because the price is going down. Obviously, it opens at the top and closes at the bottom. Okay, so it's got the same characteristics: open, high, low, close, just like a bullish candle, just opposite. It opens at the top and closes at the bottom. Okay, is there any questions, guys, on that? Pretty basic stuff, guys. Um, and then here, this is like the different time frames. So you guys are familiar with, Dave and I, we use TradingView. You can use any type of platform that you guys want to use. I used to use TD Ameritrade when I was trading with TD Bank. There's Webull is another free platform for charting. TradingView, there's multiple other ones. But they all have the same thing. You can go to time frame and you can select what time frame candle you want to trade. So we have over here, we have the higher time frames. We have the monthly candle, the weekly candle, and daily candles. Okay, and then they have the hourly candles. TradingView has a 4-hour, a 3-hour, a 2-hour, and a 1-hour candle. And then we get into, this is called like the scalping in here: 45 minutes, 30 minutes, 15 minutes, 5 minutes. You can go down to a 3-minute candle, and you can go down as low as a 1-minute candle. Okay, but the lower you go, the more volatile and erratic these candles are. Okay, and then the higher the time frame are, you're obviously just watching them over time, because it takes one entire hour for one candle to form if you're trading the hourly candles, or 4-hour candles, or daily candles. So those traders, they're charting and they're looking for breakouts or breakdowns at the hourlies, but they're not sitting like in front of a computer. They could be creating alerts, and when they trigger, then they can take a look at the trade and get in and enter the trade. And they could be also holding overnight. Okay, a lot of traders, like if they find gold at the bottom on a daily, then maybe they want to buy it, and maybe they want to hold it for 2-3 days because they believe gold is going to continue to go bullish, and then you make more pips that way. But you got to understand, if you're trading a higher time frame, you got to adjust your lot size accordingly, because you're going to be in the market for a long time. Okay, so you won't be using like large lot sizes, because if it doesn't go in your direction, you could possibly blow your account like that. Okay, so you got to adjust your lot sizes for the time frame you're trading. Okay, and also your stop loss. But we'll go over all that stuff on next week's webinars. Okay, and then types of traders. Okay, so long-term traders are like Warren Buffett. You guys are probably all familiar with Warren Buffett. The guy's got one of the richest guys on this planet. He buys and he holds. He buys and he holds. He owns like, he's got the Berkshire Hathaway portfolio. He holds a ton of Apple stock. He holds a ton of everything, but he buys and he holds. He doesn't look at his portfolio for 10, 20, 30, 40 years. He collects dividends and he lives off of that. Okay. So if he's trading, he's looking like at monthly candles. He's not looking at a 5-minute candle. He doesn't give a shit about 5-minute candles. He buys, he holds. He's a long-term investor. Okay, there's that. If you'd like to be an investor in the market, we can teach you how to be an investor. There's also swing traders. A swing trader or a position trader, these guys are looking at maybe the daily candles and the 4-hour candles. They're looking to hold for a couple days overnight, but they're identifying these candles for daily breakouts. And they're collecting a lot of pips on that, and they're also holding stocks for multiple days. Okay, so like if Tesla is reaching a daily support level, it's came down a little bit. They want to buy the bottom. They want to hold it for a few days. Maybe it's going into earnings. Maybe Elon Musk has a conference or something like that, and it's going to start to go up. These guys are looking to hold, but they're looking at the daily and 4-hour candlesticks. And then we have day traders. Day traders, they're trading hour candles, 45-minute candles, 30-minute candles. They're looking to get in, hold for a couple hours, and get out, but they're not looking to hold overnight. But and then we get to scalpers or snipers, and this is technically what we are. We're scalpers, so we like to scalp the market. We like to come in, get out, get in, get out. I don't hold positions overnight. The only thing that I hold is my Apple stock. I've been holding since 2014, and I'll hold that just like Warren Buffett for the rest of my life. But anything I trade, I'm a scalper. I'm in maybe, I used to trade 15-minute candles, but I love my 5-minute candles. I'm also, Dave and I are going to get into 3-minute and 1-minute with you guys to show you entries on those. But basically, scalpers are looking to get in get out, make 10, 20, 30 pips, look for another entry, make 10, 20, 30 pips, maybe one more, and then end the day with 50 to 100 pips, and that's it. And sleep good at night. You have no stress. You're not holding any positions overnight. You don't care if the market has something happens in the market overnight and it affects you in pre-market. You don't care. You're out of the trades, okay? So those are the different types of traders. And then you just have to decide what type of trader you want to be. And Dave and I will teach you whichever style you'd like to be. Okay. We've traded everything, like all different candlesticks. We're very familiar with them. Okay, so this is the bullish family of candlesticks. And yesterday, we did the entire bullish family where I went over these individual candlesticks, and it's going to be uploaded on the website, guys. So if you missed that, it'll be uploaded with this one. But we have individual now candlesticks, okay? And on this chart, from the left to the right, we have the most bullish to the least bullish, okay? Hopefully that makes sense. This is the most bullish to the least bullish. And if you can see, why is this side the most bullish and the least bullish? You can tell by the volume of the candles, the real bodies, okay? This A is a completely filled bullish candle. If we identify these candles on charts, these are the ones that we want to trade, okay? Your most important candlestick for trading is a bullish and bearish engulfing candlestick. Bullish is for if you're getting into a buy, and also if you want to look to sell the market, you're looking for a bearish engulfing candlestick because they're filled with buying and selling volume. So you're looking for an entry on these candles, or you're waiting for this candle to close and you're looking for your next candle to continue this momentum, and you can get into a trade and profit that way. Okay, so I'm going to go over these candles real quick with you guys because I went over them individually on our other webinar. Okay, so we have A, which is a bullish engulfing candlestick. Okay, and it's filled with buying volume. Okay, and these candles, they might have little to no wicks on them. Okay, it's just completely filled with volume. And these are the ones that you want to identify on your chart when you're looking for a buy. But again, then Dave and I are going to get you into when to identify these candles. So if you guys hear the word that I say consolidation, or when price action is trading sideways and we're not trading that, if you see like a bullish candle in there, then it could be just prices just trading around in there. What we're looking for is maybe to find these bullish candles off of a downtrend. So if we have like a sell-off of like 3 or 4 or 5 red candles, we know eventually it's going to reach a level of support. And then when we're doing our support levels, if we have like a daily, a 4-hour or hourly support on a higher time frame, and then we start to see bullish engulfing candlesticks form on 5 minutes, we can anticipate a buy entry because we could have a possible reversal happening. Okay, so it's all about where you identify these candles as well, not just on a chart you see a bullish candle and then you take it right away just because it's bullish. You got to know the context where it's developing in. Okay, so that's big, and we're going to get into all these webinars with you guys. Okay, so don't worry about it, guys. We're going to take it nice and slow with you guys. Just make sure you guys understand everything, so then it makes sense for you when we continue to go on. Okay, and if you guys have any questions, let me know, guys, as I'm going along. So this is the bullish engulfing. And then our second most bullish candlestick, like this is another good money candle, okay? So these on the left, these are money candles, okay, when we find these. And then as we go down to the right, then they get, they're not as bullish, okay? But they still are a little bit bullish, but these are the ones we really want to identify. Bullish engulfing, and this one is called a hammer candlestick, okay? It looks exactly like a hammer. This is like the handle, and this is the head of the hammer, okay? So what does this represent? This is a trend reversal candlestick, okay? So what happened on this candle? It opened up here, remember, or sorry, it opened down here, and this could have been a bearish candle coming down, okay? So it could have been a red candle possibly coming down, like selling pressure pushing this down, but now it reaches a level of support, maybe on an hourly or like a daily support, and then it starts to get rejected. So these are what these wicks represent. They represent rejections. So this could have been a red candle coming down, very, very bearish, but we still maybe had a couple minutes left on the time frame before it closed. And then near the end of the candle, we had an influx of buyers come in at the support level, and they pushed it all the way back up to where it closed at the very top, and that's what forms into a hammer candle. So this candle came all the way down. It looked bearish. It came down, probably scared some people, but then when it came down to the bottom, picked up support, buyers stepped in and pushed it all the way up where it closed up here near the high. And then with this candle, you'd look for a continuation candle, green, bullish, and continue to move up off of this hammer candle. Because remember, the wick represents all these buyers pushing it up. Okay, so you got a lot of buyers in here, and we're looking for momentum to continue to go up. Okay, so that's a hammer candle, bullish engulfing hammer. And then C here is a harami candle. This is considered to be like a neutral candlestick or a clue candle that maybe a trend will be changing. Okay, it still has more than 50% of the candle is bullish volume. So that's why it's considered to be more than neutral. It's the third candle because you still have some nice 50 to 75% buying volume, but this one had a little bit of volatility. This one came up, made a high, had selling pressure. They pushed it all the way down here where it made a low, and then it came back up and it closed up here. Okay, so this one went up and down, but it finished with large green volume where we have buyers, and we're looking for these to maybe reverse a trend. And I get into the other tutorial, the other webinar, explaining exactly what this candle is. So if you guys want to view that, I went over individually and more in depth about these candles. Then D we have here is a bullish pin bar. You probably hear Dave and I saying these on these live streams. This is a bullish pin bar candlestick. This is also a trend reversal, but it's not as strong as like our hammer candle or maybe a harami. Okay, so what happened with this candle? It opened up here, and it could have gone up all the way here. It opened, it was continuing to be bullish, but then we encountered a lot of selling pressure up here. They pushed it all the way down. So this candle started to turn red, but then we reach maybe a higher time frame support down here, and we have now buyers step in right here and push it all the way back up where it closes up here. But you see it's a very thin body, okay? Because we're losing the volume in it, not as much as this harami or like the hammer candle closing at the top or this bullish engulfing. That's why it's in the middle of our family here. It's more of a neutral reversal candle, and the body is above 50% of the wick. Okay, so that's what makes it a bullish pin bar. It's more of a candlestick that gives us a clue that the trend will be reversing, but it's not enough for us to take a trade. Okay, if you see these candles, don't trade them, just identify them, and then what you're looking for is maybe continuation. You're looking for maybe like another hammer candle to form, and then maybe a bullish engulfing candle to follow. Then we'll take a trade. Okay, and in here we have a spin top candle, and this is a pure indecision neutral candle, and you see where the body closes like just below the bullish pin bar. So this one had volatility. It opened, buyers pushed it all the way up here, sellers pushed it all the way down there, then buyers came in near the end, and then it closes virtually where it opens. Okay, so it had a lot of movement up and down, but it basically closes right where it opens, and it's got a very thin body, not so much volume in the candle at the close, but it is still green, so it's still considered to be a little tiny bit bullish. These are again indecision candles. If you start to see these guys, price could be consolidating, cooling off. It could be if you see a big downtrend and then you start to see spin tops forming at the bottom, it could give you an indication that the momentum could be starting to change and reverse that trend, or it could just be pausing, cooling off, and it might continue selling off again. But these are just like considered to be cool off candles, neutral indecision. Okay, spin top candles. You don't want to take trades off of these. Okay, you want to look to take trades off of a bullish engulfing, a hammer, and possibly like this style right here, this harami candle. And then now we're moving to the right, we're getting more to the least bullish candles. This is now F, our inverted hammer. It looks exactly like a hammer, but it's upside down. Okay, that's why they call it an inverted hammer. And this one is also a trend reversal candlestick, but not as strong as our hammer. Okay, what happens with this candle was it opens down here, it was very, very bullish. We had initial buying, a lot of momentum. It kind of looked like this green candle right here. This was like an engulfing, really engulfing candle. But again, that's why maybe you want to wait for candles to close, because if you just jump in while they're forming, you could get faked out. So this candle was coming up green. But then once it reached maybe a higher time frame level of resistance, sellers came in and pushed all that buying momentum all the way back down where it closed right here. Okay, so this initial candle opened right here and it was very, very, very bullish, but then it encountered selling pressure and they pushed it all the way down where we closed right here. So it tells you a lot in this candle. We had buyers and then sellers pushed it down, but then it closed right here and there is still a little bit of buying volume left in that candle. So we have to still consider it still bullish, but it's the least bullish compared to these ones over here. Okay, and then these candles right here, this is a doji. It looks like a cross, it looks like a plus sign. They're indecision, but very small range candles. Like you can see it opened, it went up there, it came down here, and it closed exactly in the same spot. So these candles, you never want to trade off these candles. It's just, it could be telling you the market is undecided on direction. There's no volume. You don't want to be trading these, because obviously we want to trade candles with volume because that's where the money is. If we're trading these candles, these naked candles, there's no volume. There's no money to be made. So we just got to identify these candles and then maybe look for a possible trend with that these things are creating. Okay, so that's a doji candle, indecision, very small range, no volume, thin, and it opens exactly where it closes where it opens. Okay, so basically these candles are nothing. That's why they're on the far right side. And then finally we have this one, uncommon. This is H, a dragonfly doji. What this is it's a trend reversal, but what happens was this candle could have opened up here. It came down, sellers pushed it down, but then it reached level of support and then buyers push it up and then it closes right there. But you can see it kind of same direction as a bullish hammer, but the hammer had a lot of buying volume still in the candle. This one came all the way up, but with no volume. Okay, so we could expect maybe a continuation off of here, but it's not as strong as a hammer candle. If you identify these, then just you need to wait for additional confirmation candles to continue a trade. You never want to trade right off of this candle. Okay, sorry guys, let me just put this. So that completes like the bullish engulfing family. And on the other webinar we did yesterday, I break down these individual candlesticks, and that will be, these two videos will be uploaded on the website, guys. Okay, so that's the bullish engulfing family. And then the bearish family. Okay, so this is the bearish family. So it is the exact opposite of our bullish candles. And the reason why I like Forex, I love Forex actually, is because we can be buyers and we can be sellers. We can buy gold, we can sell gold, we can buy the stock market, and we can sell the stock market. When you're trading the stock market with shares, which I used to do, I was only a buyer. I would buy shares. When it goes up, I would sell them. Buy low, sell high. I was trying to short the market, but it is very, very hard for a retail trader to short the stock market. Number one, you have to open up a margin account with your bank, okay? And you have to borrow shares from the bank that you don't own because you're shorting the market. They're lending them to you. So you have to pay an interest charge on keeping those shares that you're borrowing. So you got to pay an interest to the bank. And when the price goes down, that's where you profit. Then you sell, you buy back those shares, you give them back to the bank makes money on interest, but you're using a margin account. And if you're shorting the market and it continues to go up, you could lose everything, because you could get a margin call from the bank, because when the market's going all-time high, it's moving. If you don't have a stop loss, you could get screwed. But another thing was, when I was trying to short the market, the banks never had any shares available to give me to short, because the hedge funds bought them all up. You remember when AMC and GameStop were going to all-time highs? I was looking to short those. I could not get for the life of me any shares to short. So that's why I said shorting the market is ridiculous. Then Forex, you can buy, sell, up and down, scalp the markets. You just hit the buy button and the sell button. So I fell in love with Forex trading. But that's why you want to understand, just as much as we learn the bullish candlesticks, you want to learn the bearish candlesticks, because you can make money when the market is selling down. Okay, you can make money both ways. So these are very, very important too. And it's kind of the same structure as our bullish family, just that they might have some different names now. So I'll get into that with you guys. Okay, so like on our green candles, we had the most bullish to the least bullish. Same with our bearish candles. We have the most bearish to the least bearish, okay? So these are our money candles. These are the ones we want to find on our charts, okay? So A, we have the bearish engulfing candlestick. And this is, again, filled with selling volume. This is a lot of selling pressure. The real body is completely full. So when we see these candles, we can anticipate that we're going to get continuation and more selling pressure. So if we take a sell on this candle, we could feel confident that we're going to continue to go down. We're going to make 5 pips, 10 pips, 20, 30, depending if we start to break now support levels and we continue to push down further, okay? So this is a really nice candle. Just like the bullish engulfing candlestick is your most important candlestick for buying, your most important candlestick for selling is this one, bearish engulfing, okay? And this is the most bearish, okay? And and this one has very small wicks, can have small wicks on the top and bottom. It's just filled with volume. And again, like what I mentioned with the bullish one, you want to find these when off of an uptrend, okay? Because if you find bearish engulfing candlesticks during a period of where price is just trading sideways, you don't want to be trading them because it's just going to trade sideways. You might identify a bearish engulfing candlestick, but it might come down and then bounce right back up, come down. So when you see sideways action, like how we do with that box where the rectangle box on our charts, we consolidate it. Then what we're looking for is the breakdown below support or the buy above resistance. And then if we start to see this candle breaking down, then it's giving us an indication that maybe we should be getting ready for a sell, okay? And then another good area to identify these and find these for sells is after an uptrend. So if you have an uptrend of like 3, 4, 5, 6 green candles in a row, you got to expect that there's going to be a pullback. So once it reaches maybe a level of higher resistance, then if we start to see bearish engulfing candlesticks form, that's a good time to take these entries, okay? So we'll get all into that. We'll show you all of that, but that's when you want to identify these. Just like the bullish one. If the price is coming down, bearish, 3, 4, 5, if the price is dropping and then we reach a nice level of support on an hourly or daily, then we're looking for our bullish engulfing candlestick there to engulf those sellers, take them out of the market, and then we can get continuation on our next maybe 1, 2, 3 green candles reversing and we make our money. So that's bearish engulfing. And B, we have a shooting star candlestick. So this is a trend reversal bearish candlestick. Just like our hammer was our second most bullish, and that was a trend reversal. This is the same exact candle, but the name is called a shooting star, and it is a trend reversal. It is the second most bearish candlestick, okay? So we have an open here, and this candle could have been bullish. It opened here and it came all the way up with volume all the way up here. And maybe we had now higher time frame resistance, and now we start to get rejected. And look at now, we have a long upper rejection wick. Remember the hammer had a long lower one that represented buyers pushing up the price. Now we've got sellers pushing down the buyers, okay? And then it pushed it down below. Here was the open, and they continue to push it down where they close down here. So we're closing near the bottom, and this was a big rejection from the top, and it's got some bearish volume. So we can expect now our next candle to open red and continue going down. So we could possibly maybe enter into a trade on this candle, and hopefully this thing continues to go down bearish, break some levels of support, and we collect 10, 20, 30 pips, okay? So bearish engulfing, and then we have a shooting star, okay? Similar to your hammer and your bullish engulfing. Then in the middle, C, we have the bearish harami. This is the same as your bullish harami, same thing, but it's got red body now, and it's more of a neutral candle. It's a clue candle that a trend might be changing. So it's got upper and lower wick, but it's still got more than 50% of the body is bearish volume, okay? So that's why we consider it still to be bearish. and we could take these candles with confirmation on our next one. Like if this one now opened red and started to go down bearish engulfing, and we break this wick, this low, then we could possibly get into a sell and continue to go down, okay? And then we have D is our bearish pin bar. So just like the bullish pin bar, this is the opposite. So price action opened here, it came all the way up. We had buyers reach level of resistance, and they push it all the way down to where it comes down to here. But last minute, there could be some initial buying pressure, and then they push it up and they close it right here. So it finishes with a thin red body, which is a little bit of bearish volume, but the candle, the body closes below 50% here. So that's what makes it a bearish pin bar. And then this is the one that closes right in the middle. This is called the spin top. So that's the only difference between these two candles. This one closes a little bit more than 50% down. So then it's got a little bit more probability that it's going to be a little bit more bearish than this candle. This one is, again, a bearish spin top candle, same like that green one, but it's just got a red body. And this is pure indecision, okay? So the candle opened up here, $10. It came up to maybe $12. And then sellers pushed it all the way down to $8. And then it came and it closed right at $10 again. So it had a nice range. It went up, it went down, and basically it closed right where it opened with small selling right at the middle, neutral. This is, we don't trade these candles. We identify these. Maybe is it price consolidating? Are we changing a trend? Is it going bearish? And then we're reaching a little level of support. We might get some indecision before we start curling back and reversing to the upside, okay? We seen it last night with the US 30. US 30 was dropping. We started to see some support level. We started to see some spin top candles form, bullish pin bar, and then it started going up, making higher highs and higher lows. Eventually, when we broke resistance, we took a buy, and it went up for 50 pips. So that's kind of what we're looking for, okay? And then least bearish over here. Remember on the bullish candle, we had the inverted hammer. So this one looks like this one, a shooting star upside down. It's called a hanging man, okay? It's a trend reversal. So the only thing with this candle was it opened up here. We had selling pressure, a lot of selling pressure pushed this down. It looked exactly like this big red candle coming all the way down. But the only difference is this one closed at the bottom. So we got a lot of volume to push it down. This one came down red, and before it closed, we had buyers step in. So they didn't allow it to close like this. Buyers stepped in and pushed it all the way back up to here, where it closed right here. That's why it's called like a hanging man. It's hanging, but with a bearish body, okay? So it is still a little bit bearish volume, but you got to understand that buyers are pushing it up, okay? So that's why it's more to the right on our least bearish candles. Then again, we have that doji candle, small range, indecision, don't trade these, just giving us maybe clues that the market is just, it's got no volume. You don't want to be trading markets with no volume. There's no money to be made. And then this one, remember the other one was called the the dragonfly. This one is called a gravestone doji. So it's just the opposite, trend reversal, least bullish. These are uncommon. You don't need to take trades if you identify these. It opened here, it went bullish, then sellers pushed it all the way back down, and it closed virtually where it opened, but there's no volume. So it's hard to say where the direction is going to go because the volume is exhausted. There's nothing in this candle, okay? That's what wicks represent, exhaustion, okay? Just like when you light a candle at your house, you light it and then the wick starts to get exhausted. That's how you got to think about this. And another thing about wicks, guys, is if we have like a bearish candle coming down and it's got like a small wick on the bottom, very small wick, think about it as like a firecracker. Do you know when you light a firecracker? When we were kids, we lit firecrackers with really small wicks and they blew up in our hands. And then the longer ones with the longer wicks, you light it, you can hold it longer and then you can throw it. But think of these things as the same thing like firecrackers. If this bearish candle is coming down with all of this volume coming down and it's got a small wick, all we need is on our next candle is to just take out that wick, and it's kind of like an explosion, like a firecracker, and then you'll get a nice impulse move going down because there's no wick. Then it just continues to go down. So that's the kind of analogy I use when I'm trading, how I learned about these candlesticks. And same with a bullish candle. If it's going up very bullish and it's got a small wick on the top, our continuation candle, as soon as it opens and when it takes out that wick, it's kind of like a explosion and it's ignited and it will continue to run. So if we're in a trade, that means we make money. Okay, so try and use that analogy when you're trading candlesticks now, and understand what these wicks are, guys. Okay, you can see when Dave and I are trading, we're really zooming in. I'm watching where these are opening, closing. I'm telling you guys, look at the wicks, because these represent also take profit zones. Okay, so this is where previous price action was. So when we're looking to take profits, when guys ask where are we taking profits, you see when I set up my charts, those red lines, I'm identifying previous wicks, and I know that was previous price action, so that's where price wants to go. That will be a TP1. If we go above a next wick, TP2, and so on and so forth. Okay, so it makes it easier for you guys to understand where to take some profits. Okay, guys, if you have any questions, let me know. Okay, so that was the gold one. Again, so if we look at this gold chart, these are daily candles. See this bullish candle? We have the open right here. It's got a small wick on the bottom where that's the low. And we got buyers push it all the way up to this wick. It makes a high, and then it closes right here. Our next one is a red candle. They open it right here. It makes a high. This was the all-time high of gold, guys. August 9, 2020 was $2,075. And since then, we've been coming down where we came all the way down here. So this was the daily low, but then buyers of gold stepped in, pushed it up where they closed it right here. And then next candle, you can see that this candle is kind of like a bearish pin bar candle. We opened, buyers pushed it up to here to 2020, and then we increased selling pressure because we were coming off of this big bearish body. So it made a lower high from up here, and sellers continued to push it down where it made a low and closed right here. Next candle opened. Looking now, it's got a small wick on the top. That means that selling pressure was heavy. They didn't even allow buyers to push it back up. They came in right near the open and pushed it down. And this is when gold went all the way down, guys, to 84, I believe, was the double bottom before we started to bounce off of it. Okay, so that's gold on the like daily, how you look at them. So guys, just to recap what we talked about types of traders: long-term traders, higher time frame candles; swing traders, these guys trade maybe daily or 4-hour candles. They hold positions overnight. And then we've got day traders. These guys trade 30-minute, 1 hour, 15-minute candles. They look to hold a little bit longer than a scalper because they're maybe holding for a couple hours in a day, but they're holding and then they're getting out. They're not holding. And then scalpers are generally what we are. We scalp 5-minute candles, 1 minute. We're in and out, get our money, and we're out. Okay. And all candlesticks have the same characteristics. They all have the open, the high, the low, and the close, represented by the body and the wicks. Bullish candle opens at the bottom, closes at the top. A bearish candle opens at the top, closes at the bottom. Okay. Okay, guys. So that's basically the tutorial here. And then I introduced the bullish family yesterday. So these 2 videos will be uploaded. So you got the intro, you got the bullish, and next week we're going to introduce the bearish family individually. And then I'm going to get into this stuff with you guys. Before I start teaching support and resistance, I want you guys to know all of this, okay? Because I know we might have some new guys that are not familiar with this, and I want to go over this. This is important stuff, guys. What are pips, lots, leverage from brokers, spreads? What are different order types? There's market orders, buy limits, buy stops, sell limits, sell stops, all of that. This is going to be a really important webinar for you guys. And then stop losses. This one's another big one, guys. How to maybe position where to put a stop loss, because you guys always want to trade with a stop loss. Okay, you never want to trade without a stop loss, because if the volatility is there, it could, whatever you're trading, guys, depending how much money you have in your account, you have no protection. If that price is dropping, you could lose your money. It's number one thing when you're trading, guys, is protect your capital at all times. That's your money that you're putting in the market. You have to protect it. That's like me coming in your pocket and taking your money. You're going to fight me. You're not going to allow me to come in your pocket and take your money. So why are we going to allow the markets to take our money? We have to protect our money. Number one thing is capital preservation. Then we protect our profits. and then we're making money consistently over time in the markets, okay? But your number one job as a trader, whether you're a scalper, a swing trader, or a long-term position holder, you're looking to protect your capital and your profits. Bottom line, okay? That's why we trade. We're not trading to just give away our market and smile at the end of the day to the markets. We want to, that's our number one job as traders, guys. So we have to learn where to place a stop loss, and we'll get into that because you want to avoid maybe a head fake, but you want to position your stop loss where it gives it enough room for the trade to breathe, because you can't just get into a trade and expect it to go up right away. You might have a little bit of drawdown, but you believe that the trend is reversing, but you don't want to get taken out, so you got to position your stop loss with proper risk management. So we'll go over all of that. And then guys, after we do that and the Bearish family, pretty much we're done the candlesticks. Then I'm going to get into teaching you guys trends, support and resistance, uptrend, downtrends. I'm going to teach you guys about, we're going to get into patterns, M and W patterns, very basic to look at, but they tell you direction of price and like head and shoulder patterns and things like that. So we'll get into that. Then we'll move on to technical indicators. We'll break down technical indicators to you guys, and then we'll teach you guys a few trading strategies and things like that. But if you guys can just watch these videos, guys, they're very informative. They're very good. They're only about 10 to 12 minutes long. So it doesn't take too much time. You don't have to watch them all. You don't have to binge watch them, but just slowly identify, they're all in order, guys. So they're all strategically in order for you guys. So, but then if there's something that you want to see, like how I use RSI on my chart, we have an RSI indicator tutorial. So you just look for it. And then you can watch it and then learn about like, yeah, here's EMA, here's VWAP. I'll get into Bollinger Bands, Fibonacci retracements. Here's the RSI. The RSI was developed. It tells you what it is and then how to use them. We have the strategies in there. So, and then MACD, stochastics. And then these are strategies, guys. So you can learn about the golden death cross, Fibonacci retracements, how to do a swing low to swing high to swing low. And then you probably hear us talking about this a lot. I use RSI on my charts to look for bullish and bearish divergence, because if you can anticipate this, this is where you can make a lot of money. Okay, so these ones are important too. And then here's bullish divergence on MACD. Sunak, how are you, buddy? Whenever I see a spin top at the top, price dropped. That's because when you see a spin top candle form near a top, do you mean like a resistance point at the top? Because you're getting indecision there. It's reaching a higher time frame of resistance. So you got selling pressure pushing it down, but you still have buying momentum from the bottom because it's still in an uptrend. So that's why you're getting those spin tops. So you gotta wait, you gotta be patient, you gotta allow them, because there's indecision. There's sellers and there's buyers in the market that are pushing it up, pushing it down, and they're fighting for that. So it's not enough for you to take a sell entry. You need to wait for it to be fully exhausted, and then you got to start to see now it start to make lower lows and lower highs, and then you need a nice volume filled candle, like a bearish engulfing candle or like a shooting star candle form, and then that would be your buy entry. But let's go to TradingView, guys, real quick. It's almost, what do we got here, 8 o'clock, but we can look now at real candlesticks. Okay, so this was, if you guys were trading today with in the morning, this is 10 a.m. This is gold on the 5 minutes. So gold was coming up. Here's a bullish engulfing candlestick. Okay, so look at how this was a red candle. Okay, this was bearish. Price came down, but then look at this candle. It gapped down and it completely came up and filled this entire red candle. Okay, so that's why it's called an engulfing candlestick, because the buyers in this candle engulfed all of these sellers. Look at from here to there. They took out this big red candle. So these sellers are out of the time frame. They're out of the market. So we can anticipate that price action is going to continue to move up now. So there's two types of ways that you can trade these candles. Okay, look here. So see the support level. See, we never broke below 1823 right here. We touched it, we bounced off, touch, bounce off, touch, bounce off, touch. So that's basically 4 touches, okay? And we don't have no body close below it. So we're starting to gain some nice support on the 5 minutes. Now look at what we see here. These are spin top candles, okay? See how they're going up and sellers are pushing them down, but then they're closing right here with a little bit of buying volume, okay? Some traders trade this, they take these trades, and yeah, you can ride it up, but you got to understand that when it's going up, it's coming right back down. But then it opens, but then you got to watch the bottom of these wicks. They're forming higher lows and we're making higher highs. So this is the start of a nice little uptrend, okay? But then this is could be what you're talking about, Sonique. There is up here, we get to a level of resistance, okay? So you see, we got resistance on this red wick, we got resistance here. Now it's forming these spin top candles. Now you get the spin top candle, and in your next candle is like a bearish engulfing candle. It comes down, okay? But this is just a small pullback because we're now in an uptrend. So now when you identify this bullish engulfing candlestick, this is kind of like your buy entry, okay? So if you never took the buy down here, this is your small pullback, but look at here what's forming. You have a bullish engulfing candlestick, take out all of these guys, and you have still this uptrend form the higher low from 1823. So we can anticipate that price is going to continue to go up. So there's 2 ways you can trade this. You can start to buy. When you guys get more advanced with your trading and you guys get better and you learn more with us, you could possibly start to take this buy down here at 1824, and you're making money all the way up there, 1825 to almost 1826. That's almost a 15-20 pip candle right there. Then you're continuing off of this candle and more profits. But if you're new at trading, the proper way to learn is you allow candles to close for confirmation. So we would allow this candle to close. We identify it that we're moving on an uptrend. We've taken out those guys, bullish engulfing. Then this would be our buy candle, this one right here. We would allow it to open. We see it open and it's got the wick coming down. Remember what I told you guys? The low. So that's the low of the period. We identify it right there. It makes a new support right there because now we have a rejection. It's buyers stepping in and they're coming off of this bullish candle. So we can anticipate that price is going to go up. And remember what I told you, as soon as we break above the previous wick, then we got momentum to go up, and then we break this previous wick. So these are like take profit zones. And then my next zone I would be identifying is this red wick. Okay, so our next candle gets up there, and you could be looking to scale out a little bit of profits or continue to hold your trade, move your stop loss now wherever you had it to maybe a break even trade and continue to run it. And price is continuing to make these higher highs. Then we start to get rejected up here. It starts coming down, but remember, we're forming in an uptrend now. So we're making higher lows, and then gold continued to run up all the way up to 1828. Now we could be reaching maybe a higher time frame. Okay, look at here. Last time we got up here was at 7:30. Look, we had nothing over here. So this is a big resistance up here. This is what started that downtrend, and we came up and we broke right through it. Okay, so this thing is making new highs. Now what we would have to do is we got to go on a higher time frame to see resistance. And I remember when we were trading, when you guys were trading this morning, when it started to break out here, we thought it was going to go up to 1830. This thing actually broke out a little higher to 1832. Okay, so and then look at the bear trend. Okay, so remember what I was telling you to look for sells when you have a nice uptrend. Okay, now you're looking for it to get exhausted. That's why I use like RSI also on my chart. So if I put RSI on my chart, this would help me to understand if it's getting overbought or oversold. Okay, so when I'm looking at this play up here coming up, look at our RSI. It's at right here 70. But do you guys now look what I see here? I don't want to get too advanced with you guys right now, but look, if you attach this high to that high, okay, you see how price went from 1832 all the way up to 1832.70. Okay, so that made a higher high. The price was going up, but if you look now on your RSI indicator, this is why I use it, plot it at the same levels, exactly where you did your candlesticks, do it here. Why is the strength going down? Okay, so if the price is going up, strength is going down. This is now telling me that we're going to possibly have a pullback or a sell-off. So what I do is I identify the high, the resistance up here, 1832.70, okay, because that's where I want to know where to place my stop loss, like if I'm taking a sell up here. And then what I identify is some small support levels, okay? So I can see a support level right here. Hopefully you guys can see that too, those 3 candles. Do you see the bodies? They never broke below that, but now I start to see a red candle form. It's coming down. It's a bearish engulfing. It engulfed this little green candle, okay? So that's step 1. Next candle, this is the one that opens, and there is buyers that still are from these candles that push it up, but look at the wick, 1832.46. It's lower from this wick up here. So what I would do if I was taking this trade today, I would look for a sell entry. Okay, where would I place my stop loss? I would also have other resistance lines up here because I always do top down, but I'm just saying I would keep it safe above that previous high. You got to give it some room to breathe. But then I'm looking now for a breakdown right here. So this is a pullback and then it goes bearish. Okay, and then look at what I do. I look left on my candles. There's another support level. We break, that could be TP1, okay? And then it drops for like 10 pips from there, okay? So you could look for TP1. There's a little bit of a pullback coming back up to here, but you're following these wicks. This one made a lower high at 1832. It's lower than this one, lower than that one. And now what type of candle do we have coming down? A shooting star candle. Remember, long rejection wick, body is at the bottom. Remember I told you that was our second most bearish candle. So we can continue with the momentum to the downside. We just got to break below this support level, the head of that candle, pierce below. You can see the wick. Guys, if I zoom in real close, that's why I zoom in on my charts. See that little wick? It made a new lower low, but then buyers stepped in and closed it right there. So we're looking for more momentum to the downside. We got a shooting star candle. Next candle, again, opens right here, has some buying pressure. That's what is identified by this upper wick. Look at my resistance now. When we break a support line, it acts as a resistance. Look at the price action, guys. It comes right back up to that line. I'm not making this up. This was today at 1245 if we were trading. Comes right here, makes a lower high, lower high. You could continue to hold this trade. You can make a lot of pips with this. Then we get, you see the rejection come down. We break the support level. Next support, look left on your charts, guys. There's another support level. Look at all of these candles. They held at that price, which started to go up at 1830.44. Our next candle came all the way down and closed below it. So we could anticipate a little bit more pressure to the downside, and we get it down there. Then it starts to reverse. You get a bullish engulfing candlestick come up. That's where you guys should be looking to take your profits. Don't get greedy, because this could come right back up in reverse. And if you calculate your pips, if you took like your sell entry on this candle, let's say 1832 all the way down to 1830, that's a 20 pip move, okay? 20 pips, not bad. If you're doing like $1 a pip, that's $20 US you made. If you do a 0.5, half a lot, 20 pips, you made $100 US. If you do a standard lot, a 1.0, you made $200 US, okay? So you can start to see, and you made that in 5, 10, 15, 20 minutes of trading, okay? Some people got to work a 9 to 5 all day to make $200, okay? That could be their entire daily wage, okay? And you can make that in 20 minutes, and you can look for possibly another trade. And then another thing, guys, why I don't get greedy, why I put my psychological 50 line right here on RSI, and look at where we saw the bearish divergence come all the way down. We didn't break below 50, so you got to expect the buyers are going to come in and start bouncing it up. That's why you get this bullish candle. So anytime we're coming down to 50, if I see that we're not breaking, I'm looking to exit the trade. I'm looking to take my profits, because if we stay above 50, it's still bullish territory. Then you can see it started to hover around here. Then finally it started to break down. Finally right here is when we broke the 50 support. Again, you're just following your candlesticks. Support level breaks, and you could be looking for another sell and profit on the way down, okay? And then look at where it really broke down right there, okay? And then you want to trade with the trend, guys. You don't want to counter trade, okay? So initial sell-off up there. We've got pullbacks creating these lower highs. RSI is starting to go down. Here's another pullback. If you don't feel comfortable scalping this, relax. Trade with the trend, okay? and the overall trend is your friend. Look for sell entries, and then look at this big sell here. You can go again, take the sell down here, 1830, all the way back to 1828. There's another 20 pips. And look at it. It's just clean candles. Like, you can't go wrong on this. 1, 2, 3, 4, 5, 6, 7, 8, 8 red candles in a row, all making lower lows and lower highs. You can even start to draw a trend line. When it's going down like this, draw a trend line. And as long as these candles stay below that, you can continue to hold this trade. Wait till we start to show you guys moving averages and things like that. That's where it gets exciting. So if I like throw a 5 EMA on my chart, you could really see that price action. I'll show you guys all of that once you guys learn all of this price action, okay? So guys, do you guys have any questions? And then you can see right now, so this is like live right now. This is gold live, okay? So look at what happened. It started to go bullish. We reached up here. See what I mean? These candlesticks start forming up here at a level of resistance. We get all of these like indecision candles in here. See how they have very thin bodies? Because we could be expecting a move now. So it came all the way up, and then we got a little bit of consolidation, then it starts breaking down. Okay, you got a bearish engulfing candlestick, take out this big green one, close below a support level. This is where buyers tried to push it back up to here, 1830.70, wick pushing it down. That's like a small shooting star candle. And then look at what's followed. This huge, big, red bullish candle. Look at it. Remember what I told you? No wick on the top, no wick on the bottom. This is the money candle, guys. This is called a Marabuzzo. This is an ignited candle. And look at the continuation. It continued and continued to go down. So this one, look at it. It's continuing to go down. See the RSI again? Hit up here. I bet you there's divergence up there too. Look at, so we can spot like divergence. Again, price action was going up, okay? And strength was basically, it was not going as high. Like look how the arrow direction was going up like this, and look at the strength. It was coming, this is like hidden divergence. It wasn't coming down yet until we got this bearish candle, and that's when it started to break. But remember last one where it went and it held at 50? This one broke 50, and look at it. That's why we're getting this extended continuation, okay? So guys, like I'm telling you, these candlesticks, this is the money, guys. Learn this stuff, and I promise you guys will love to trade the markets, guys. Just be patient and disciplined. That's all I can teach you guys. That has to be self-taught with you guys, okay? You got to learn to be patient and disciplined. Don't just trade every single candlestick because you see a bullish candle. Like right here. Exactly. This is a good example. See here how you just have these small range candlesticks. You got a bullish candle right here. It engulfed this one and that one, but look at it. It didn't continue to go up, because if you start to identify your resistance level right there, okay, the wicks, the bodies, whatever you want to identify, it was bullish engulfing, but look, it did not break above that previous. So you don't want to take a trade. A trade would be to take a buy is if our next candle, the volume opened up above that red line, it held this, then we would possibly take a trade to get up to this red line. Might be a small pullback again, a red cool-off candle, and then to go up to here. But this one was bullish. Maybe there was some buyers that took this, and then they got caught, and then look at the next candle. If you're not patient, wait for the close. Next candle was bearish engulfing and took all those guys out, okay? And then went down a little bit, and then we start to come back up. But this is what you're watching for, guys. You're watching for this break. And look right here, when we get the break, right there, okay? So that candle is like your buy entry, okay? You could take that as a buy, okay? And then where do you place like stop loss? So if you were to take this, okay, that's why we identify this level of resistance. We're finally breaking it. Remember, TP1 is our first red line, TP2, and then like TP3 up there. And where do we put our stop loss? You can place it, some traders place it below like the previous candle wick. That's a little tight if you keep it like that. You want to allow the room to breathe. I would possibly place it right below that support line right there, okay? And especially if you have like a daily or an hourly support and you're under there and you're trading 5-minute candles, you can feel confident. And that trade is 1.5 risk to reward. So that's a good trade. You're getting 1.5 to one of your dollar. Okay, so for every dollar you risk, you make $1.50. Every $10 you make $15. Every 100 you make 150. That's a good trade to take. You want to look for 1 to 1, 1 to 2, possibly 1 to 3 or more. If a trade is not giving you like a good 1 to 1 on your money or less, don't take that trade. And then what you do, guys, when it starts to go up into profits, you can start to take a little bit of profit, take your stop loss and start moving it up to eventually it's at a break-even trade. And then you have no risk. You have absolutely nothing to lose in the market, nothing but profits. But take profits as they go up, especially when you're scalping, because look what can happen. If you get greedy and the price goes up and you never took your profits, look what happened. 1, 2, 3 candles came right back down to where you bought in. All of your profits are gone and you could potentially now be triggering your stop loss. Okay, so what I told you, number one, protect your capital, protect your profits, especially when you're scalping. If you make 10, 20, 30 pips, take your profits and look for another trade. Okay. Yeah, Doug, no worries. Thanks for tuning in. We're gonna be streaming live at 9 o'clock, guys. So I'm gonna wrap it up. Another